this is clearly today, last trading day of the month, the most obvious rebalance that I've seen in recent memory. You're seeing all of the sectors in the equities market that have been underperforming year to date: consumer discretionary, communication services, technology. They're leading the market. The other side of that, financials, industrials, energy, underperforming the market. And then you have the hyper growth story coming back once again. So within that hyper growth story, you could look at a Twilio, a CrowdStrike, Palo Alto Networks. Those are names I'd be focused on. But what I would do is this, Scott. I think that the bigger picture of this market is that you posted a low in January, and the market is pattern matching exactly 2016. If you have the chart back in EC, please show what I gave to you guys before the producers. 2016, you had a sell-off, November peak, market sold off aggressively in January, retest in February, and that was the best outcome because the market was clear sailing higher from there. So I clearly think what's going on here over the next 10 days
when you'll hear
is you may
that
get the retest at the bottom from last
Yeah.
Monday. You may not, but I think there are names that you're going to go in right now and be able to buy, and you're not going to get hurt. But they're not the names that are rallying today. They're the names where you've got the free cash flow generation present. They're high quality in their nature, and a lot of them are large cap. Remember, Scott, small caps broke through Monday's low on Friday, so I don't see the all clear for small caps. It's large cap, it's quality, it's the big mega cap names we know.
So Liz, we're going to enter a new month, and we're still asking ourselves this question of whether we bottomed last Monday. And, we've had a nice rebound since. And I'm curious to know what you think as to whether this is a sell the rip kind of a market. You've got a nice move in the NASDAQ, as we just showed you. We've got a nice rebound. Morgan Stanley's Mike Wilson today says he's uninspired by last week's price action. We would be sellers of rallies, he said. We remain uninspired by the price action at the index level despite strong earnings prints. We're seeing a classic bear market action, says Mike Wilson of Morgan Stanley. So, in essence, he's doubling down on his negativity. What do you think about that?
So I think last week's action and the big swings that we saw intraday, that's probably over. That was probably as bad as it gets from an intraday swing standpoint. But I don't think we're done with this volatility. You have to look at what's happened in the NASDAQ year to date. We're only 1 month in, and if this move holds today, this would be the 7th day of more than a 2% move in the NASDAQ. That is a lot of days with big moves. The VIX above 20 now for 2 weeks, above 25 for 6 trading days. I think the VIX stays elevated here. So then the question is, what do you do with your money, knowing that rate hikes are probably coming in March and that we're embarking on a rate hike cycle? If you look at the patterns of what happens in the market leading up to rate hikes and then what happens afterwards, generally speaking, cyclicals do well into the hike, and then afterwards we have choppy markets for about 3 months. If you can wait 6 months out, then things start to strengthen up. You see tech come back in, communications come back in, and things stabilize. But you have to have the stomach for it. So I would stay on that value, on that cyclical trade here for the next 45 to 60 days. And then you have to wait it out. I don't think this volatility is over. The Fed has not even moved yet.
Is right in what they're supposed to look like. They make mistakes, but they're on it. Of course they do. Well, right now isn't the time, I guess. Oh, I am recording.